All right, welcome everyone. Today, we're going to pull back the curtain on the super fast-paced world of day trading. It's a topic that's got so much hype around it, but what does it really take to succeed? We're going to break down the disciplined path, from the very foundation to the mindset you need to survive.
Okay, let's just dive right in. At its core, day trading isn't what most people think of as investing. You're not buying a company because you believe in its 10-year plan. No, this is a high-speed game focused entirely on these small, tiny price wiggles that happen during the day. You're in a position and then you're out, sometimes within hours, minutes, or even seconds.
So here's the big question, right? Is this the dream job, the quick path to making a fortune from your laptop that you see all over the internet? You see these stories of instant success, but let's take a hard look at what the data and the pros have to say about the reality behind all that hype.
And this is absolutely crucial to understand. This is not a get-rich-quick scheme. You have to realize you're stepping into a digital arena, and you're competing head-to-head with professionals who have access to the best tech, billions of dollars, and decades of experience. The odds are seriously stacked against a beginner who isn't prepared.
Okay, so if the odds are stacked against you, how in the world do you even get started? Well, success here isn't about getting lucky. Nope, it's about methodically, piece by piece, building a rock-solid foundation. And believe it or not, that foundation starts with some very real-world requirements.
And right off the bat, this first hurdle might actually surprise you. This number, 25 grand, it's not a suggestion. In the US, it's a hard and fast rule from FINRA called the Pattern Day Trader Rule. It basically says if you're going to trade frequently, you need at least this much in your account. It's a pretty big barrier, and it's there to make sure traders have a serious capital cushion.
And this is the process. Before you even think about risking a single dollar, every disciplined trader follows these steps. It all starts with education. You got to learn the language of charts, psychology, and most importantly, risk management. Then you build a very specific plan, and you only trade with money you can truly afford to lose. You start small, learn the ropes, and above all, you practice unwavering discipline.
All right, so once you've got that foundation built, let's talk about the rules of engagement. These are the core principles that really separate the serious traders from the gamblers. And trust me, these aren't just suggestions, they're your survival guide in the market.
And this right here, this might be the single most important rule in all of trading. We're talking about risk management. The pros, they almost never risk more than 1 to 2% of their entire trading account on a single trade. So if you have a $40,000 account, your maximum loss on one trade is capped at $400 to $800. That's it. This is how you survive a losing streak and stay in the game.
Okay, here are a few more nuggets of wisdom from the pros. First up, the market open, it's pure chaos. For beginners, it's way better to just sit on your hands and watch for the first 15 minutes. Also, avoid penny stocks. Yeah, they look cheap, but they're often impossible to sell and are ripe for manipulation. And be realistic. You don't have to win every trade. You can be profitable winning just half your trades, as long as your winners are bigger than your losers.
You know, it's funny. Everyone focuses on when to get in a trade. But the pros, they'll tell you knowing when to get out is way, way more important. And your stop-loss order, think of it as your automated eject button. It's the price you decide on before the trade where you just admit you were wrong and get out to protect your capital. It's a non-negotiable tool.
Okay, so we've covered the rules for survival. Now let's take a quick peek at the playbook, right? What are some of the actual strategies traders use to find opportunities in all that daily market noise?
So you've got a few different flavors here. There's trend following. That's kind of like riding a wave, assuming it'll keep going. Then you have the total opposite, being a contrarian and betting on a reversal. Scalping is super short term, just grabbing tiny profits over and over. And of course, trading the news. But you have to remember, not a single one of these strategies will work without those foundational rules of risk management we just talked about.
Now, let's zoom in on one of the more advanced and, frankly, misunderstood strategies, short selling. It's a wild concept. Instead of betting a stock's price will go up, you're actually betting it's going to go down. You borrow shares, sell them, and then hope to buy them back cheaper later on, pocketing the difference.
But you have to, look at the risk here, because this is where short selling gets incredibly dangerous. Think about it. If you buy a stock, the worst that can happen is it goes to zero, right? You lose what you put in. But a stock you've shorted, it can go up and keep going up. There's no ceiling. So your potential loss is theoretically infinite. That makes it an extremely high-risk game that needs very strict controls. We could talk about rules and strategies and capital all day long, but at the end of the day, the single biggest thing that separates the winners from the losers is what's going on right up here in your head. It's the ultimate differentiator.
Yeah, it all comes down to emotional control. The two biggest drivers of terrible decisions in the market are fear and greed. Every single choice you make, from clicking the buy button to honoring your stop loss, is going to be a battle against those two impulses. Your own psychology can be a way tougher opponent than the market itself.
And it all boils down to this one simple mantra that every successful trader absolutely lives by. The real work, the hard thinking, that's all done before the market even opens. When the bell rings, you're not thinking on the fly, you are executing a pre-planned, well-researched strategy. That's it. It's all about discipline.
So that's really the final question you've got to ask yourself. Day trading isn't just a numbers game, it's a mind game. And your success is going to hinge on one thing. Do you have the discipline to follow your rules, even when your gut is screaming at you to do the exact opposite?
Hey, thanks so much for sticking with us for this deep dive into the disciplined path of day trading. If you got something out of this, it would be awesome if you could hit that like button and subscribe to the channel. Seriously, it helps us out a ton. Thanks again for watching.